Hey there, this video explains the rules of debit and credit. So you might have seen the previous video where we recorded accounting transactions using the accounting equation, and we did things like plus to cash or plus to retained earnings. Instead of using pluses and minuses, when we record accounting transactions, we record debits and credits. So, what is a debit and credit? Okay, that's what I'll explain in this video. This is what we call a T account. It's called a T account because it looks like the letter T. And it has two columns. It has a column on the left side and a column on the right side. Now, the special name for the column on the left side is called the debit side, and the special name for the column on the right is called the credit side. And it doesn't matter if we're talking about an asset or a liability or an equity, the left is debit and the right is credit. And so we'll move down here and you can see I've got our accounting equation. I've got assets, which are equal to liabilities plus equity. And you can see it goes debit, credit, debit, credit, debit, credit. The left is always debit, the right is always credit. Now, there's two columns in a T account because one column will add up all the increases and the other column will include all the decreases. Now, the rule is for assets, all of the increases go on the debit side and all of the decreases go on the credit side. For liabilities and equity, it's the opposite. All the increases are on the credit side. How can you remember this? Look at the accounting equation. We've got this equal sign here. Assets are on one side, liabilities and equity are on the other side. Assets are on the left side of the equation, increase is on the left side of the T account. Liabilities and equity are on the right side of the equation, and increases are on the right side of the T account. So let's take this down here, for example, cash. Cash is an asset, so the rules for cash are the same as all assets. This is the debit side, and this is where your increases occur. You can also write debit for short as DR. This is the right side and we call that the credit side. Now, because cash is an asset, any increase will go on the debit side, and because it's an asset, any decrease will go on the credit side. So what that means is every time you receive cash, you will write the number in the debit column of the T account. And every time you pay cash, then you will write how much you paid on the credit side. And then what you can find at the end, you draw, that didn't work out, I'll undo that, is you draw a line at the bottom and then you can find out how much cash you have at the end. So the normal balance of a T account is where the ending balance appears, and this is also the same side where the increase occurs. Now, we need to look at three specific examples, which are revenues, expenses, and dividends. So revenues are what the business earns from selling their products or providing services. And when you earn revenue, this is going to increase the net profit in the business, which will increase equity. So revenue is increased on the credit side. Expenses and dividends. When an expense or dividend increases, the expense will decrease profit, which would decrease equity, and dividends will directly decrease equity. So expenses are recorded on the debit side of the T account, And any increase in an expense, so this is when you use an expense, when you incur an expense, this will always be a debit, or when you pay a dividend, this will also be a debit as well. So we'll put the debit there. If you think about normal balance, what this also means is your ending balance will be on the debit side for expenses, your ending balance will be on the debit side for dividends, and your ending balance will be on the credit side for revenues.